What a bunch of goofballs. What a bunch of goofballs. Check this out. Check this out. I clicked on this link, short squeezing coming, Castor Maritime. And the link is supposed to be right here. Story not found. They took it down. You bunch of chickens. You bunch of silly chickens. What are you doing? Oh, get out of here. God dang it. Don't come back on your word. You're getting people all sad. What is up, everybody? Welcome to Trades. We're doing technical analysis and different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. Today, my friends, we're going to be talking about CTRM. This has been all over my comment section. Guys are like, Trey, what's up with CTRM? Did you ditch us? Is this play dead? Are we done? Are we done here? No, this is not a dead cat, as we always say here. So we're gonna give you guys an update on the company. In case you're new to the stock, we're gonna tell you the fundamentals of the company, the why should you care. We'll look at some recent news. We're gonna look at the financial situation, why I think this has potential for growth, and then we're getting into some different news articles, the whole 9 yards, and then the meat and potatoes, which is the chart setup. We'll look at the 1 month chart, and maybe not the 1 day 1 minute chart because it is pretty barcode-ish right now. But I've got a couple different indicators pulled up. Right, you've got the RSI down here, the relative strength index. Anything over 70 is overbought, anything under 30 is oversold. This gives you an idea of both bullish and bearish momentum on a stock. Look at the overall volume, and then I've got the 200 EMA, which is this purple trend line, and the 15-day MA, which is this blue trend line. The 200 EMA is the exponential moving average. This is a price action based valuation trend line over a 200-day moving period. It gives us a macroscopic perspective of price action. Then I've got the 15-day MA, which is the moving average. This is a price action based valuation trend line. It gives us a microscopic picture of the overall price action. We use these side by side so we can predict upcoming breakouts and breakdowns to get the best possible entry point into our stock. We use a hybrid system of both fundamental analysis and technical analysis so we can find out what stocks to buy and when to buy them. So with that being said, let's get into the video. We've got quite a bit to talk about. So what is Castor Maritime? To put it very simply, they are an industrials company that focuses on transportation of dry bulk cargoes through the acquisition of different carrier vessels. So they've been acquiring quite a few vessels over the past, I would say month, 2 months, and we're just going to show you their website here really quick. So if we look at their investors tab and their press releases, right, we can just take a peek at all the different vessels they've acquired. As of February 18th, that's the last vessel that they have bought, right? But if you look at this, 1, 2, 3, 4 different news articles in the last 1 month alone, just talking about new acquisitions of vessels. This is 1 vessel, 2 vessels, 3, 4, right? And then if you go back farther than that, 5 different vessels they bought in the last month and a half or so, which is a lot. And this matters because for a company that is focusing on the transportation of dry bulk cargo, right, you need to have more vessels. It's like having a Bitcoin mining company and not having enough computers to actually make a profit, right? The more computers they have, the more money they can make. However, the downside is that it costs them capital, right? Some of their cash flow, some of their profits in order to lock in these deals, right? In order to have these vessels. And that is going to make their margins a little bit tighter. They're not going to be bringing home as much of their revenue. So in the short term, right, it might not make their revenue spreadsheet, their income statements look that clean. In the long term, this makes them a very profitable company, or at least I would say at least very, very likely to be a profitable company. I don't think there's ever going to be a shift in demand. And that is also important to realize in terms of a fundamental analysis perspective is how is this going to compete with other companies out there, right? How is CTRM going to do when it all comes down, push comes to shove? And I don't see any foreseeable way that this is ever going to be a service that is discontinued. Until we can get to a point where, services, dry bulk cargoes are transported via air, perhaps, that's just not going to happen. We just don't do that, right? We don't transport mass goods over the air because for whatever reason, I would assume it's just cost efficiency. We don't have the means to make that happen at this current moment. So they keep acquiring vessels. That is good news for the investor. That is a good thing to pay attention to. We're going to come over here to the financial situation and then come back to these recent news articles and show you some more data. But if you look at their annual income statement, right, I've got 2019 pulled up here, and they grew 35.47%. We don't have 2020 yet, but we can get a pretty good idea based on the quarterly, and that is a pretty solid picture. So they got $5.97 million of total revenue in 2019, and they pulled home gross profit of about $3.16 million, which is pretty solid. That's a little bit higher than 50% margin. They're pulling back a pretty decent amount of that. Their cost of revenue is $2.8 million, so they actually pulled more home than they paid back in order to lock in those profits, which is good. The marketing administrative expenses about $378,000, so that would be something in the lines of pushing the company out, trying to bring in new people to the team, trying to attract new investors, right? It's marketing, it's advertising. That's a good thing to see. No R&D costs, right? There's not really research and development that needs to go into the purchasing and acquisition of new vessels for the company, which is, you know, you can take that for what it is. That's how I am, you know, extrapolating that is they just don't need to do R&D for the company. It's just not, you know, something that makes sense for them to do. Total operating expenses was about $4.68 million. So a pretty high amount. That was up, you know, compared to last year. Ideally, we would maybe like to see that drop down a little bit. And then other non-operating net income. This is a red thing. This is perhaps not good to see. Their other non-operating net income is ways that they pull in money that is not their actual net income, right? Their total income coming from revenue and etc., right? This could be something as simple as direct offerings. Maybe they got donations, you know, XYZ, different reasons. That net income was down, and their operating income was also down, as you can see here, pretty much the exact same total. Their net income right here was $1.09 million, negative 27%, so that was down as well. My extrapolation for this, my reasoning is they have been purchasing a lot of different vessels. So I think that it is going to be a little bit of a ding in the short term, right? You're seeing them put money back into the company, reinvest in themselves so that they have potential down the road. Looking at their quarterly statements, they have just gotten better and better and better, right? They saw $2.79 million, very consistent. Consistency is great. You love to see that nice, consistent growth, right? They've got $2.79 million of total revenue. Their total gross profit, $1.03 million. So in this previous quarter, their margins were a little bit tighter. They didn't pull home as much. It was more than 50% that they paid back of their total revenue. So ideally, would like to see that number go down. That's something I would pay attention to if I was you in the future holding CTRM. To be transparent, I do not currently have a position in CTRM. I am rocking SOS as a swing trade, Microvision long-term, Exxon long-term, Sensonics long-term, Whammy long-term, AGTC I've got call options on here, but I've got stock in that my other portfolio long-term, and then AMC. So take this with a grain of salt. I don't have a position. I want to be completely transparent. It's not because I have no interest, right? It's because there's other plays that I'm rocking right now that I try not to over diversify. So this is for you guys. I did get in and out of CTRM a couple times now, and I can't envision myself getting back into this down the road. Other expenses were up a lot, $598,000 total dollars, right? So that's actually gone up a lot over the past couple of quarters. My anticipation for that being that they're paying a lot of expenses in order to acquire these other vessels. Now, keep in mind that those are in the millions of dollars range, so maybe that $598,000 doesn't quite add up. Well, you might be thinking, how does that make sense, right? But this isn't taking into consideration Q4, which is where, you know, a lot of these buys, and actually, you know, Q1 of 2021 is where you're going to see that other expenses really start going up because they purchased millions of dollars worth of vessels over the past couple of months. So it's green. It's a good solid growth that you're seeing quarter to quarter, year over year, right? And that is something that does matter. So just keep that in the back of your mind. I do think that is a positive sign for this stock. Now, I've got some other data pulled up that I think is very interesting. In the short term, these bunch of silly chickens, I can't believe they pulled that down. In the short term, I do think they've got potential for a short squeeze. They're at 100% utilization right now. Cost to borrow is 19.14%. Days to cover is low, though, right? So the days to cover being low means that the chances of a short squeeze happening are currently not high, right? But the utilization is there for it to happen. This is currently in the shorting territory. It's in bearish territory. You can see this looking at the chart setup, right? Because if you look at it, it's been getting kicked down a little bit. It's getting shorted pretty hard. But eventually, these guys can get caught pissing with their pants down. It's very realistic and possible. 100% utilization means that there are currently zero available legal shortable shares to lend. They're all being currently held. So that's important to keep in the back of your mind. And if we come over here and look at the CTRM short interest, right, you can see that there's a huge amount of short volume that's coming in on the stock. 17.5 million total short volume as of March 1st, which is 33% of the total market volume. That is a lot. And that would explain why, even though we had a crazy green day yesterday, the stock didn't move much. It's because it traded sideways. Honestly, that shows a lot of strength. The fact that it got shorted that heavily and it didn't really drop that much tells you a lot of strength is sitting in this stock right now. So that is good to see. That's a good thing. We look at the overall short shares. Availability is at 10 million, according to Fintel. And you might be thinking to yourself, how does this make sense? How could it be, 30 million total short shares, but we've got utilization right here of 100%? That brings me to my next point, right? There is sometimes unaccounted for shares in a stock depending on a variety of different scenarios, right? So this could be something as simple as, they've got a crap ton of call options that came in on this, and some market makers decided to hedge to account for these call options, meaning that they purchase shares from the market in order to be able to have collateral in case people want to exercise those options, right? That is a possibility. That's just one scenario. But regardless, we show you a bunch of different sources because we don't always know if the data available to one source. If AMC and GameStop have taught us anything, it's that sometimes data is a little bit manipulated. So this number could be wrong, right? The Ortex number could be wrong. I'm showing you these both. You make the most sense out of it in the best way that you can. But that is what I am seeing right now. We come over here to the CTRM stock itself. I wanted to show you a couple different things as well. The public float is 363 million total shares with a short interest of 31.02 million, which would mean that about 10% of the overall stock is currently being shorted. But that was as of February 12th, 2021. And Ortex is more up to date than that in terms of utilization, right? They update this on a daily or bi-daily basis, meaning that once or every 2 days, that number is updated. And it's been at 100% for 7 days straight, which is huge, right? This was not updated since February 12th, so I do think that number is probably a little outdated. And I also wanted to show you the overall market cap, which I do believe is here. It's at $607 million. So, pretty small company. I wouldn't say, an ultra small company. They're a little over $500 million worth of market cap, but they've been growing pretty well. It's a pretty decent sized market cap company. And honestly, I think they're a little bit undervalued per share. And that comes back down to, what you're looking at here is the total shares outstanding, which does come around, it's 364 million total shares. Public float is what is available to the public after there are shares that cannot be traded to the public itself. Institutional ownership, we've got a couple of big stakes in here. We've got a 4.9% stake as of February 16th from CVI Investments. That's a pretty decent little share. About 1% from Thalassa. You guys can read these. You can pause the video if you want to take notes, but you always want to pay attention to institutional ownership. That is significant, right? And these percentages may be a little bit different now. It'll depend on if the shares outstanding have changed at all. I don't anticipate that they have, but if you add this all up, right, that is going to come out to a pretty decent stake in the company. The fact that they're sitting at 364 million total shares outstanding. My anticipation would be that these percentages are a little bit off now. But if you were to add this all up, 6, 7, 21, this would be 35, 48, 54, 56. We're just going to call that 56 million compared to the overall, shares outstanding of 364 million. That would make up, maybe 15%, 20% or so. So that's a pretty decent stake in the company. And that is something that I think is significant and worth paying attention to. That's my girlfriend, by the way. All right. So what do we got now? We're going to look at the 1 month chart. I try to break that down in the simplest way. The why should you care? Why do I think this is a solid midterm to long-term investment? I do think this is going to have solid potential if you hold this for a couple of years down the road, right? But as it's sitting right now, my capital is tied up in some plays that I think are going to move a little bit sooner. Not to say that CTRM isn't going to do anything, right? I definitely think it has potential to move, in the short term, especially if that short squeeze does end up happening, right? We've got potential for that. Does the gamma squeeze have the possibility? No. So there's not call options on this play as of now, which would, completely invalidate what I was talking about in terms of hedging. But regardless, I show you those different sources so that you can, pick what you would like out of both of those and make the most sense out of it. So with that being said, what are we looking at right now? Well, we had a crazy downward amount of selling pressure. So you look at this macroscopically speaking, we got 3 touch points here. 1, 2, 3, 4, 5. We broke that. We're out of that downtrend now, right? We started a little bit of a consolidation phase. And we can verify this because we've got the 15 MA trading sideways compared to the 200 EMA. When they trade sideways like that, they're parallel with each other. That typically indicates an upcoming period of consolidation. When they hook in towards each other, that typically means less volatility. Hooked out means more volatility. And when that 15 MA crosses over the 200 EMA, which is what we're watching for next, that typically is a sign of an upcoming breakout. So if you see something like this take place, where you got the 200 EMA trading sideways, if the 15 MA starts to gap up, right? They hook out away from each other. That is a perfect entry point. That is my favorite kind of play, especially if you've got some volume that follows up with it, some unusual trading volume, right? What would be an example of this? Well, if we just come back here, we didn't necessarily get that crossover, but we got the hook away, right? So look at this little hook away from the 15 MA over the 200 MA. This is exactly what I'm talking about. It's a break away from that trading, even that consolidation, and we got a bump in volume. Unusual trading volume, we got a hook away. That's a sign of an upcoming breakout, and you see that came to fruition right here, right? That doesn't always happen, but I would say 7 or 8 times out of 10, that is a beautiful scenario. The same thing could very, very easily happen here. So if you want to wait until this starts hooking back, right? You want to put your money in different places. What you could do is keep an eye on this, keep it on your watch list, right? Watch for a little spike in trading volume, a small push. It could be something as simple as 2 times higher, 2.5 times higher, right? That is an indicator that there's something unusual happening in terms of volume. You can see that 15 MA start to hook in towards the 200 MA, bam, entry point. If you don't want to do that, you want to get in now, I still think you're going to make off like a bandit if you just have a little bit of patience. Right now it's trading at $1.02. It is corrected an insane amount. Honestly, my friends, I will always admit when I miscalculated and I did not think they were going to retrace this much. I 100% did not. That is a gnarly retracement. They came back down to about 61.8% in the grand scheme of things, which is, you know, ideally you're looking for 50%. They tried to hold there, right? But the market got absolutely crushed. They got schwacked last week, and there was no stock basically that was immune to that except for AMC and GameStop. But I just don't see any possible way that they're going to shrivel up any more than this. I think that is the absolute basement. They did see a bounce there, and they have been slowly creeping back up. So we've begun a little bit of an upward moving trend line here. We're currently trading at $1 in the pre-market. What is a good entry point here? Well, if it continues to respect this ascending level of support, $1 will treat you very well. If it does not, right, it breaks that, it may retest, you know, down here at that 91-cent range. Of course, we do not want that to happen. We want them to maintain NASDAQ compliance. That is obviously ideal. So we're going to be looking for a hold over the secondary trend line, which would be right around here, this next level of support at about 97.6 cents. Get a bounce, right? Somewhere between these price zones of 90 cents and $1.01. There's really not a lot of risk involved here. I mean, we look at the RSI, it's been consolidating, not a lot of momentum, right? We don't have any hard pushes that are coming here. And we actually have a little bit of a hook down, which may indicate a little bit of selling pressure stepping into the stock coming in today, right? And with the and you know, look across the board, we had a couple of stocks that had a little bit of a gap down. So for instance, we've got AMC. If we look here on the 1-minute chart, you can see it had a little bit of a gap down early in the morning, right? We opened up a little bit red. Same thing happened here with SOS. Same thing happened with Microvision. A lot of stocks saw a slight little bit of selling pressure. So today may be a solid buy day. We're going to check Microvision as well. Yeah, across the board, you get the idea. We had a small gap down, which typically is a sign of a little bit of a red day, a flat day in the market if you've got that gap down in the pre-market. So I wouldn't expect anything exciting today from CTRM, but if you do want to get into the stock, it is a solid opportunity with little risk, in my personal opinion, with a lot of upside. If you're willing to have the patience to sit it out until it starts moving, that is what I have for the video today. If you enjoyed it, please drop a like. It really does help support the channel, and consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull. This is version 4 for the desktop. Great platform that allows you to start trading at 4 a.m. in the pre-market. If you use my link, you get 2 free stocks with a $100 deposit. I'll receive a free stock. Great way to support the channel, my friends, and if you're not interested, that is totally fine. I just appreciate your support by taking the time to watch my videos. I also have a link in the description box down below to the Discord. If you click on that link, you will be, directed to the Patreon page. It's $5 a month for the cheapest plan to join a community of amazing investors, right? I'm going to be backing down on the content that I push out. It'll be somewhere around 3-4 videos a day, and they will be able to answer a lot of your questions. We're all about education. We're all about teaching a man how to fish, and there are some intelligent people in there, way more intelligent than I am. Check that out. And then there's a link as well to the merch store. If you'd like to pick up a Gorilla Gang mug or some different shirts, whatever you want to do, you don't have to do that either. I really don't care, my friends. That is what I have for you guys today. Thank you for watching the video, my friends, and I will see you all next time. Peace.